I've been investing into the stock market in my Robinhood portfolio in particular since about 2020, and this is the very first time I've ever withdrew any money from my Robinhood portfolio. So in today's video, we're really talking about when is a good time to sell a stock. I always talk about buying a stock. I talk about getting in at a certain price target, but when's the time to sell? When is the time to take profits, withdraw from that account, and go about your day? Let's not waste any time. Let's get right into it. Let's go. Like if you're buying shares for a company, you're pretty optimistic. You think the stock price will go up in value over the course of time. That may be a week, a month, 2 years, 5 years, or whatever. When it comes to selling those shares, you're dealing with multiple different things at the same time that could be very conflicting. Say, for example, you're up 50% in a position. You may be like, well, I think it could go higher. And if it can go higher, then I could make a 60% profit or a 100% profit. So in that case, the greed is starting to settle in. But you may also be down in a position that you bought that you were optimistic about in the past. And if you're down in that position, then you may feel as though, okay, well, maybe it'll stop right here, or maybe it'll continue to go lower. So you don't really know. You're uncertain and you're fearful. So you don't know what to do. In this particular case, I'm going to tell you what you should do in all those situations. There is no perfect reason on when you should actually sell a stock, but I can give you some legitimate reasons on why you may be interested in selling some of your shares in a position or even a full position. So let's talk about the first one. And the first one is pretty much just better opportunity. The better opportunity could work in both ways. Say, for instance, you're up in a stock. Let's take me for an example. I actually just recently sold all of my shares of Microsoft stock. Now I had about, I think 11 shares, give or take, and I was up about 65% on those shares. Now, do I think Microsoft is a bad investment? Absolutely not. I think Microsoft will continue to perform well over the next 2 to 5 to 10 years. But I think the other stocks that I bought will perform even better in Microsoft over that same timeline. So I pretty much sold my shares of Microsoft for a profit to put that money towards something where I think I would make even more profit towards over the next course of 5 to 10 years. In that particular case, that's more of a strategic move for me because I think I'll make more money from this other stock. This other stock that I'm talking about is AMD in particular, if you're wondering. But I think I would make more money from AMD over the course of the next 5 to 10 years than I would make from the shares I hold in Microsoft. Now, better opportunity may present itself on the opposite side of things. Say, for instance, you're down in a particular position. If you are down in that position, it may be a better opportunity to go ahead and sell all your losses right now. Say you're down 20%, sell all your losses right now and put that money towards another stock where you feel as though you'll make a lot more money from or you're already making money from. So in that particular case, if you continue to hold that stock and it continues to go down, or even if it doesn't go down and stays the same, you're playing with opportunity cost because you're holding on to something with the hope that it'll go up while all these other positions that you already hold actually are going up. But nonetheless, better opportunities exist no matter what side of the fence you are on, if you're up or if you're down. There's always an opportunity that's probably better for you in the market. It just comes down to if you're willing to make that or not for your particular investment outlook. Now, in mentioning investment outlook, the second reason that you might want to sell your particular position could be because of your own goals or your strategy has changed. So in my particular case, my goals and strategies have changed over the past year when it comes to my Robinhood portfolio. Before, I would say when I first started my account, I was really invested into mainly dividend stocks fully. Like I was full-blown dividend investor. I wanted to get as many shares as possible to get all that good dividend income every single month or every single quarter, depending on the stock. Now, I focus a lot more of my energy and a lot more of my money towards investing into growth stocks. Now, this is really important because this is a strategy that has changed for just me and just me alone, my personal strategy for my personal finance situation. And it would be different for you, but the question that you would need to ask yourself is what you actually are invested into and what are your investment goals. If you want to make a lot of money in a short amount of time, then you may want to be invested in more high growth, high risk plays. But if you have a different time horizon than myself, say for instance, you're 40 or 50 years old, you may want to be invested into those heavy hitting dividend stocks because that's going to give you some consistent income over the course of the next 20 years into your retirement. And that's exactly what you would want by the time you retire, simply because you're probably going to be looking for more stability. If you're retiring, you're probably making a lot less money after you left your main income source, which is likely that job. So if that's the case, then you probably want that stability, and you're going to get that stability from those dividend stocks. Those dividend stocks may not grow that much, but they will provide you a solid dividend that's most likely going to consistently be paid out over the course of a next 5, 10, 20 year period. Real quick, we have a brand new channel partner, investing.com. So if you're looking at some of the visuals on this video, all the visuals are actually from investing.com. You will get 15% off if you sign up with my link below, and they give you a slew of different tools for you to go ahead and use to make the best investment decision for yourself on your investment journey. I've been using it on my app, on my iPhone, and also on my Mac every single day ever since I got my membership. And yeah, let me know if you wish to sign up. Like I said, the link will be in the description. You will get 15% off with my link, and that's pretty much it. The third legitimate reason why you may want to sell your stock is strictly off of fundamentals. If the fundamentals of a company that you're invested into completely changes. So say, for example, you're heavily invested into Apple right now. Apple's CEO right now is Tim Cook. Now, there are rumors circulating that Tim Cook may actually step down as CEO and somebody else may replace him as CEO. So that person that supposedly is going to replace Tim Cook as CEO, are they qualified to be CEO? Do you think they'll do a good job as CEO? Will this completely change the face of Apple in a good or bad way? Honestly, you don't know those answers, but that's something that you can think about based on what they already have on their resume to put them in a position to be CEO of Apple. You can change CEOs and have a successful company. I mean, we've seen it with Apple. We went from Steve Jobs to Tim Cook, and they're still flourishing. Obviously, their AI stuff is a little right now, but past that, they're still selling phones. They're doing really well. They're still creating new products. That's also selling well. So overall, the company has done just fine since Steve Jobs. But will that continue to be the case? That's a question you have to ask yourself, and also look at someone else's track record to base everything off of. That may be an opportunity for you to sell a little bit of your position if you feel a little worried about it, or double down if you feel like it's a great thing to do. But the fundamentals don't have to be on the side of management things only. It can also be on the side of the financials. Is Apple still making money? Are these iPhones still selling? Are these MacBooks still selling? If you go back and look at the earnings reports, or go forward and look at the earnings reports to the future, are they losing money or making more money from the products that they're continuing to sell? And are they also improving these products as time goes on? So all these questions you would have to ask yourself, all these questions you can look up data and get information for, but that would obviously come down to make your decision as to whether you want to keep a stock or sell it. If you see they're not going in the right direction, and you also see that nothing else is changing when it comes to management, then it might be in your best interest to sell. If you see that it's not going in the right direction, but they're changing management to hopefully get it back on track, then maybe that's just a hold position for you and you sell a little bit. Completely up to you. You have to make that judgment call. The fourth reason you may want to sell that I want to mention today is personal. It's completely personal. It's personal needs. If you need the money, or you need some type of investment for something else, say for instance for another stock, or even outside of the stock market, say for instance real estate, say for instance starting up your own business, or paying down some debt, it's completely up to you, because it's your money, it's personal finance, and that's personal to you. You may need the money for that particular case, and if that is the case, then sell your shares. If you need to do that, then by all means definitely do that, because that's probably in your best interest. You probably thought about this to an extent of why you would want to be selling your shares, and that's literally all it kind of takes. There's absolutely no reason to feel guilty about selling your investments, whether you're up or down in a position, to go ahead and take care of your important life goals. Now, some people may think that those life goals aren't as important as investing into the stock market, and that's their personal opinion. It does not matter to you. So whatever it comes down in your personal life that you need to do with your money, then go ahead and do that with your money and your investments. Is it the best decision to make at the time? I can't tell you that. Only you can decide that for yourself. This particular case also hits home for me because, like I mentioned in the beginning of the video, this is the first time I've actually withdrawn money from my Robinhood portfolio. I withdrew about $5,000 from my Robinhood portfolio, about $4,000 in crypto, about $1,000 in stock, to go ahead and take care of something in my actual day-to-day life that could get me even further in life, in my personal opinion. I'm open to sharing it, just not yet. So just stay locked in, stay tuned, subscribe, and you'll see what it is. It's a very big surprise, and I'm very happy with it. So yeah, that's all I'm gonna say right now, but you will see over the next 2-3 months. The last reason, or reason number 5, is to simply take profits. There's so many situations. I've gotten caught up in this multiple times. I'm sure millions of other investors have done the exact same thing. Is we're up in a position and we simply don't take profits. You can be up in an option play, you can be up in your regular stock play, but take profits. Well, let me give you an example. Some investors have an investment goal of taking profits at 100%. So if I buy a stock and it goes up over 100% in value, then I'm going to take profits after it gets over that 100% in value. Some people may have a threshold of a little bit less than that, maybe 50%, maybe 70%, but that's a complete made up rule that you set for yourself, and that's a complete goal that you set up for yourself of when you would want to take profits. But you should take profits, because if you don't take any profits, you're not making any real money. Now, this obviously is very dependent on what you're actually invested into and also your time horizon yet again. Like I mentioned before, I bought AMD shares. I don't plan on selling those AMD shares for around 5 to 7 years from now, from today. So if that's the case, even if I'm up over 100%, I may trim a little bit off, but I don't really plan on taking all of my shares or selling all of my shares of AMD simply because I'm up over 100%. To me, that doesn't really matter, because I feel like there's much more growth left for AMD over the course of the next 5 to 7 years. And if I'm up over 100% after a single year, then I'm probably not going to take profit. I might take a very little bit, maybe 5 to 10%, but nothing major where I kind of just want it to grow. Personally, it just depends on what you're invested into and how long you plan on holding these positions. If you think you can get 500% off a position and it's up 400% in a week, then go ahead and sell that position. The likelihood of it going to 500 is probably high, but at the same time, 400% in a week, that sounds like a lot of profit in a very short amount of time. So you should take profit in that particular situation. But if you think that same investment is going to go up 500% and it's up 40% over a course of a day, I would probably hold it for a little bit longer, especially if you plan on holding that investment for a long time anyway. Now, those are 5 solid reasons of when to sell, but I also want to quickly go over when not to sell. You definitely don't want to sell when a stock is down. That's number one. When the stock is down, just think of it as a discount. If you really did your research and you're really invested into a company and you really like this company and you want to be invested into this company, just because it goes down 10% or whatever does not mean that it's a bad company and that you should sell. Now, plenty of beginner investors do this because, let's be real, they're just scared and they're miseducated, they don't know. But realistically, all you're doing is losing money every single time. What you should do is actually buy more if you do have a high conviction of this stock going up in the future over time. So if you're invested into a company and you think it's going to do well over the course of 5 years, but it's down in the first 60 days, by all means, do not sell. Continue to hold the company and, in fact, buy more, because now you're buying at a discount than what you originally got in at. Simply put, do not panic sell just because of short-term market volatility. Just because the market's going up and down every single day because someone's tweeting does not mean that you should go ahead and sell your entire position because you think something may happen. It may. For all we know, it may happen. We don't know. But realistically, will this tweet matter over the course of the next 20 years for your particular investment? Probably not. And also, do not sell because someone else told you to. Just because you saw a TikTok, a YouTuber like myself, anybody else on Twitter, maybe Wall Street bets that are selling or buying, that doesn't mean that you should sell or buy. Do your own research to figure out if you want to be invested into this particular company. If you do, then buy. If you don't, then don't buy it. It's that simple. And the exact same process works for selling. But now, before I close this video out, I do want to mention that taxes do play a role when it comes to selling a stock. Obviously, when you sell your position, you do have to pay taxes on the profits that you make, or you can actually get a tax benefit if you sell at a loss. Now, you need to talk to a tax professional about this. I'll make a full separate video going over it, but by all means, you should talk to a tax professional when it comes to figuring out if you're going to sell a large position of your money, because you do have to pay taxes on it. There are methods and strategies that you can use to help yourself when it comes to selling a stock for taxes, such as tax loss harvesting, using the tax lots feature on Robinhood and also other brokerage platforms and stuff like that, which like I said, I'll talk about in a separate video. But just remember in the back of your head that taxes do play a role when it comes to selling a stock, whether you're up in the position or down. Either way, let me know down in the comment section anything you like to know when it comes to investing and stuff like that. I have plenty of other investing content on the channel. Let me know what your worst, let's think about this. Let me know what your worst investment was, or your worst sell was, the sell that put you under a lot of stress. Let me know that down in the comment section below. And then anything else you want to talk about, I'll be down there in the comment section to reply, to respond. So I'm there. I'll catch you guys in the next video. Got plenty of content coming, and that's pretty much it. I'm out. Take care of yourself. Stay safe, stay positive, stay hydrated. Dollar Mike. Peace.